oil prices have returned to pre-pandemic levels after hitting record lows. The surge is driven by heightened expectations of economic and oil demand recovery as vaccines are rolled out. Oil prices are often seen as a barometer for economic activity. And demand is rising in parts of the world, including Asia. Some new trends fueled by the pandemic are helping to limit damage caused by a plunge in air travel. For example, the e-commerce boom is supporting demand since plastic packaging is made with oil products. A fuel demand for trucks, ships and freight trains is also expected to boost prices. And output cuts by producers, including Saudi Arabia, that's helping as well. Well, Brent crude, the major benchmark for oil, started the week at more than $60 a barrel. WTI rose above $57 for the first time in a year. Now, Brent has jumped almost 60% since early November and WTI up 54% during the same period. Well, for more on oil's recovery, Vandana Hari, founder and CEO of Vanda Insights, joins us now. Well, Vandana, why are hedge funds turning bullish on oil once again?
Hi, good evening. So we saw really an upturn in the oil market sentiment started last November. You might recall around mid-November was when we started getting news of a spate of vaccine trials that were very successful. So basically, the market started looking towards a brighter future, one with a progressive victory over COVID. Now, what has happened, I would say roughly a week to 10 days ago, is another dramatic upturn in sentiment, and which is coming basically from oil market fundamentals itself, though financial markets have also been supportive. So if you look at the supply side, we still have the OPEC, non-OPEC partnership, which was withholding nearly 7.2 million barrels per day of oil from the market as we started this year. And then Saudi Arabia sprung a surprise on the market at the start of January, adding another voluntary 1 million barrel per day cut. So we have that group of 23 producers now withholding up to 8.2 million barrels per day of oil from the market. On the demand side, as I mentioned earlier, it was almost the flick of a switch. We had the WHO saying last Monday, unusually good data that globally, at least for 3 weeks, COVID seemed to be receding. Now, that was essentially a buy signal for oil markets, because if COVID is receding, and this is naturally, mind you, we have not reached the stage yet to get a global immunization. So you have expectations of demand picking up. You have supply still being withheld from the market. And then you have a generally supportive environment in the financial markets as well, especially with the U.S. stimulus talk now. So it's, all systems go basically for the oil bulls right now.
Yeah, Vandana, so assuming things stay the way they are right now, what is your long-term outlook on oil prices? And if prices were to change, what would the factors be?
So if you had to look out into 2021, generally speaking, through last year, we knew that 21 would be good. I mean, part of it was just being optimistic as human beings, but we knew vaccines would be rolled out. And we would know that, one way or another, whether it's a natural decline in COVID, which is the case right now, or whether it's immunization, we will not need as harsh lockdowns. If you look at Asia, for instance, again, no vaccinations yet, but in Asia, it's been receding for a long time. So that was generally an optimistic view. I would say the downside risk, however, to prices, if you ask that our price is just going to continue moving up all the time in 21, I think the downside risk is OPEC, non-OPEC starting to put more oil into the market. Now, obviously, they implemented huge cuts last year, unprecedented, nearly 10 million barrels per day. And that is hurting their economies as well. So as prices start to recover and as, market demand starts to come back, they'll want to regain some of that share. So, and especially against the U.S. shale. So we will see, we do expect OPEC to start tapering, to continue tapering its cuts through the year. There's also a chance that U.S. production will come back. I don't expect a huge comeback. It was down by nearly 1 million barrels per day. It's a huge blow to the U.S. shale sector, but it will come back a little bit, possibly a little bit in places like Brazil and Canada as well, which are outside the OPEC, non-OPEC combined. So, as demand increases, as prices increase, we would expect supply to come back gradually as well.